It's August 2022, and the record overbidding that we saw in the spring of this year has completely evaporated. Where are San Jose prices today and where are they headed? Stay tuned. Hi, I'm Theresa Wellman with homeownerexperience.com, your local San Jose, California realtor. Today we're talking about the closed July 2021 market stats for the San Jose area. We're going to talk about the changes we've seen in the market in the last several months and what I see going forward. So let's start off like we always do with the Santa Clara County chart for some perspective. So looking here at the screen, you can see that prices have seen some crazy jumps in 2020, 2021, and early 22. But prices have softened, and we're going to get more into why that has happened. But the supply part of it is back to normal pre-pandemic numbers. We are up 45% in inventory from 2021. But remember, that was crazy pandemic year. So if we look at relative to 2018 or 2019, we're right on par. The biggest thing that's a little concerning was this last month, our demand was about half of what it was a year ago. And again, the pandemic was crazy and we saw more sales. But if you look at this dotted purple line, we were at close to winter levels for this season. Not quite there, but pretty low for July numbers. So if you look at the demand here, you see that in July, we only closed 603 homes, and the 20-year average is actually 987. So we're quite a bit off of that. But year to date, our sales are just under 5,000 homes for Santa Clara County. In 2021, we were at the same time of year, 6671. So there was 33% more sales in 2021 than in 2022. So quite a bit of difference that we're seeing, right? But looking back at 2019 pre-pandemic, we were at 4884. So actually today we're even higher year to date than we were in 2019. So not bad. So how about San Jose? What about the specifics there? So the supply is definitely the same. It's on track for a more normal pre-pandemic market. We talked about this last month that we were in a crazy market with inventory lower than the number of sales because we were just selling things so quickly and had such short supply. But now we're heading where the yellow line is above that green line to a more normal curve. Now the demand again in San Jose was quite low, and here you can see it was very close to January and February sales numbers. That's a little concerning. But this dotted blue line shows the pending sales, and they did take a tick up. So that's a little bit eases my worry tad. Now looking forward, the market is not bad, but we've had some adjustment period, that's for sure. And there are many sellers out there not willing to accept the changes that we've seen. And now a lot of things caused these changes. We had increase in inventory, decrease in stock market, huge increase in interest rates affecting affordability. So all of those have affected the sales price numbers. Let's look at it a little bit related to interest rates. So this brown line here is interest rates. As you can see, in December, we are at about 3.1% interest rate, and we are now above 5%. So over a 2% increase in costs in just about 6 months. So that has really affected the overbidding. I opened up saying that record overbidding has almost completely evaporated, and here's what I mean. February and March, we saw on average 18% over people were paying over list price to get into a house. July, the average was 1%. So 17% gone because buyers are feeling that affordability, feeling that loss of their extra cash due to the stock market. So it's really affected our market, definitely. Buyers are really sensitive now because there are more choices to the repairs and upgrade costs that are necessary for a property. So looking at the market a different way, what I wanted to understand was this overbidding premium that people were paying. You know, granted that has gone away because of the affordability, but if we were to say there was a level cost, if you will, of a property, subtracting that overbidding or sales price to list price ratio off of the price every month, this is a chart that I've created based off of that. So the red line is adjusted by the sales price to list price average amount. So in February and March, I said it was 18%. So I subtracted that 18% to get to this red line. Orange is the average San Jose price, right? So what I want you to note is the delta between the orange and red line. That's when the overbidding increased and got bigger and bigger, right? So we saw that similar thing when we had a similar type of inventory to sales ratio back in 2017, 2018. Never got quite as crazy as 18% over though. And you see here with the pandemic, as soon as the pandemic hit, that gray line here, there was a little bit of adjustment period where there's just a slight overbidding, and then it grew a lot, and poof, that is pretty much gone. You see how drastically that has dropped. And it's not that the prices have dropped so much, which, I mean, they have, but it's really that overbidding that has completely gone away. And that sellers are seen as a huge price drop, but buyers are just seen as a normal market now. You can also note on my website this market barometer. It's really showing that intensity of the market has completely dropped. Same thing. So let's look at the actual stats for San Jose. The average price is $1.6 million. That's down 7.3% from the previous month, but still up 4% year over year. Only 50% of homes in contract, which is slightly better than last month, but a lot less than last year. Again, that sales price to list price ratio averaging out at just 1% above asking price. And we are up to 64 days of inventory. This is our biggest change. You see, a year ago, we were at 3 weeks of inventory. We've doubled that number of inventory right now. And the closed sales were down 35% and 48% compared to last year, like I mentioned, about half. And the pending sales, though, they're actually up from the previous month and up from last year a little bit. So those are promising signs that we are starting to settle. Let's stay tuned to get into these same numbers for townhomes and condos, because I know with this really high $1.6 million price, you're going to want to know those numbers. But before we get there, let's talk quickly about the market. So interest rates have settled a little bit. As the Fed raised rates again, there's a little bit more comfort and confidence in the market to catch up with inflation. And so mortgage rates have actually settled slightly, which is quite nice, though they are going to continue to go up throughout the rest of the year, probably ending close to 6% at the end of the year. Unemployment ticked up a tiny bit in June with some layoffs that were happening. And the average price versus the S&P 500, well, the stock market is slightly recovered, which is great. So hopefully, again, that's another sign that the real estate prices are going to settle. So now let's talk about those county-wide condo information and townhome information. So the average price there is $1.046 million. And the supply is also seeing the same thing, back to a more typical curve with lower sales than normal. And, the median price is back to the 2018 peak, which is kind of crazy. The condos and townhomes didn't appreciate the same over the pandemic years. And the average price is still up though. So here's the actual numbers again, looking at these. And the biggest thing is, I'm going to say here, the sales closed and pending are quite a bit down. So we're still seeing a 7% appreciation on average year over year, which is promising. So next, watch my video on buying real estate. Do not do this. I just published a couple of weeks ago. It's something, if you're looking to buy, you really need to know. And if you're still trying to figure out whether it's a buyer or seller's market or what that really means, watch my video on that as well. Thanks for watching.